What is happening with the local Bay Area real estate market? Right now, it is in early November, and we are seeing some of the most extreme of a split economy that we have seen in probably my lifetime. Leave in the comments below if you have experienced anything like this before, where a certain group of people, I would say more experienced people in the industry, have had some of the best years ever. I mean, take a look at the record high stock prices we will take a look at momentarily. You can see as long as they're still working, and many of them are, they're getting paid more. They're also getting really, really good RSUs and really, really good stock uh, compensation, and they're able to make more money than ever. And we do see that in the real estate market when it comes to single family homes and these luxury homes. On the other end, there's a lot more softening on those first time kind of buyers or entry level buyers. No different than what we're seeing with the big layoffs that are happening for many companies. So, where is this likely to go? How will this impact the local Bay Area real estate market? Today, we're going to be going over several things, and we're going to look at the data itself of the Bay Area. One, we're going to be looking at home prices. How have they trended? But today's video, I'm going to be separating into two different categories. So, if you don't really care about condos or townhomes or single family, just jump to that appropriate section. Single family we'll do later on because of the very different perspective. So we're going to talk about the home prices. We're also going to be talking about taking a look at the mortgage rates. Mortgage rates have actually improved to some of the best it has been ever since the run up of 2022. And we will also talk about the general stock market. Like as long as this bull run is going, we may continue to see this kind of situation because a lot of companies are able to benefit really, really well from AI, number one. Number two, investors right now clearly don't care about the profits or the expenditures about these companies. Now, my name is Spencer Sue. I'm a Bay Area native. Every year, we help about 65 to 70 clients that are making their moves. And it is very confusing for a lot of people. And our goal from this channel, but also with our insights, is to help people understand their best options as soon as possible and make a decision that is best for themselves. Now, at the end of the video, I will also go over different things about what you could do depending on which of these categories you are, because these don't usually last forever, but it's really up to you to decide. Now, let's take a look at the stats itself. Let's start off with the general mortgage rates, right? Everybody's kind of been watching the mortgage rates. Last week we had the Fed had a mortgage rate cut, and that has been really, really beneficial. And so as you take a look at the mortgage rates, you can see mortgage rates are actually at some of the lowest it has been in a long time, right? So if you take a look at this, last time it was this low was back in September of 2024. And then you can see the last time prior to that was back all the way in like 2023 times. But you can see they tend to fluctuate a lot, right? It doesn't tend to stay at one number for good. It tends to fluctuate quite a bit. There may be some times we have these little dips and then all of a sudden it increases. Because if you think about it, inflation hasn't really gone away, but the economy has been weakened, and so this is what you see. Now we'll see what happens if it bounces back up, if it continues down. But when it comes to home buying, the key is this. As long as it's within this range and it still works for you, which as you can see, it's between like a 6 to 7%. If it works, it works. Because let's say if you got it at 7%, there are many free refinance options that if you get to like half a percent lower, it already makes sense to financially refinance. That's why when you saw this kind of trend down, 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 a lot of people were like, look, I bought at this time. There was less competition, but I did that. And let me just refinance. So then we are going through a lot of refinances. That's why you see a lot more refinance happen because you can see there's been many times it was past 7% in the last couple of years. But obviously people were still buying and selling homes. So just be mindful of that. As long as these numbers ultimately work, yes, it is more beneficial. You will save a little bit more money than before, but don't let that deter you one way or another. It's been in this band, as you can see, from really, if you look at it here, September 2022. So it's 3 years now, right? So you can see it's been in a similar range. So as long as it works, I don't expect it to be drastically better. Maybe it improves a little bit, but to really bank on it improving too much more, wouldn't count on it too much. Now, stock market wise, as you can see for Nasdaq, it doesn't care about where rates are, right? At the end of the day, if you look at 2022, and even if you were looking at, I mean, it doesn't even matter where you compare it to, right? Like it's just been absolutely incredible of a run as to what has been going on, and it still has been this way. Even this last month increased 4%, 3.89%. So this is exactly fueling those that have the confidence, they have the ability, which they clearly do. You cannot argue how someone cannot have the ability if they've been working at these at any of these companies that are in the Bay Area. And we're not even talking about the best ones. We're talking about for like most of them, right? But then again, there's a lot of those people that are working here. It could be at Meta, it could be at Google, it could be at Apple, it could be at Broadcom. Broadcom is a secret one. Not a lot of people know about Broadcom. A lot of my clients at Broadcom, they just want to quietly keep executing because they're just absolutely smashing it. And never mind about Nvidia and all these other companies. But you can see, as long as this is like it is, even if it drops a lot, like it's still such a big margin. I mean, look how much it has increased from just the 2022 levels. I mean, this is like stellar. This is over 100% increase, right? It's literally 100% increase. So it's absolutely stellar. People completely forget about this. Like how much of a bull run we've had from the stock market, especially the ones that are benefiting here in the Bay Area. Now, what I want to talk about is this, though. As I brought up, we are in a K-shaped recovery or a K-shaped economy, not even a recovery, a K-shaped economy. Some people are doing better than ever. Otherwise, you have also the same news that layoffs are occurring. Well, these companies are clearly being rewarded by trimming people. And one can argue there's probably too many people with these companies, especially with how efficient and how productive AI is. And so we are seeing both of that. So let's take a look at this together, right? So let's look at, we're going to be looking at Santa Clara County, San Mateo County, but most places kind of follow this similar trend when it comes to condos and townhomes. But if you take a look at the data, right now, October has ended, right? So all of these numbers are really as recent as it gets, just a couple days ago. So you can see the median price is at 950. So if you compare that to versus previous times, you can see it's actually quite a bit lower, despite these record high stock prices. Unfortunately, for a lot of these condos and townhomes, they have not been doing well. So it really depends on when you actually bought. Because even if you bought, so if you bought in 2022, like during the height of things, most of it you are going to be negative, and it's going to be negative by a good amount. And this is condos and townhomes. Let me break it down for you for the condo side. So if you look at the condo side had also been very weak. If you look at this, right, even weaker than townhomes. So 717 right now for median price for condos. If you look at like the highs of 2022, 852, even in 2021, 800. I mean, this is a 10 to 15%, 10 to actually, yeah, maybe even closer to almost 17, 18% less than what you have from even 2022, 2021 numbers. And that confirms that the number of buyers for these homes has significantly dropped, right? And by the way, there's a lot of these people they would have sold, but they choose to hold on to it and just rent it out because the rental market, fortunately, has been continued to rise. And they just didn't want to sell for a specific price. Maybe they bought at this time because usually a turnover is like every 5-ish years, especially for a condo. But it's just something really, really interesting that you can observe. Like there's a lot of these what I call zombie properties that look, they wish they can sell, they can't really sell, they would sell at a loss, or they just mentally don't want to sell, but the rent is actually okay. They got these low rates, they just stick on it. But if things don't change or they don't improve drastically, it's kind of this trap that they just hold on to this. While, as you can see, there is a big opportunity cost to just move that money to other things. We all don't bat 100%. And so it's something just to be mindful of as you make a decision. Like, look, do you cut your losses in some, or are you really optimistic that this will turn around? Now, this is San Francisco, this is Santa Clara County and San Mateo County. If you look at condos, like let's say in San Francisco, I mean, if you look at San Francisco, I'm going to even pull it back to even like a 2018 because San Francisco is also different. I don't know if you guys saw there was a an article about like Manhattan's lost decade. So if you bought even back in 2015, you may have not even made any money. And if you look at San Francisco, while San Francisco October number has improved, you can still see kind of goes up and down and it kind of falls between like this band. So this number actually doesn't mean that San Francisco is like hot or anything like that. It's more going to be specifically on the individual property because there's quite a bit of variance when it comes to condos out in San Francisco. But if you look at it, like even if you buy in 2018, if since the median is 1.2, like even if you buy all the way back in 2018 or 2019 or 2020, 2021, 2022, you can see kind of goes up and down a little bit. 2022 was the highest. It hit a moment at 1.38. But even if you buy it back in 2018, you may not necessarily be making any money. And by the way, since 7 years ago, the HOAs for a lot of these have gone up a lot, right? If you want to know, feel free to let me know. I can pull up the numbers of like a sale that happened in 2018. You can see for that same building what the HOAs were then and what they are now. Now, a lot of it has to do with inflation, but a lot of it has to do with also just I mean, the inflation in San Francisco is also more extreme than everywhere else because the labor is more expensive. All of these components are more expensive and there's more regulation, things like that. So really interesting to see, right? I wanted you guys to see this stat when it comes to condos and townhomes. But if you go back and look, or if we take a look at and look at single family, let's pull this up. Because a single family, on the other hand, especially the more expensive it is, and I'll do a separate report about the luxury market, let's say 3 million plus. But if you look at like single family, the single family market is has just done a little bit better when it comes to prices versus what we saw previously, but it also still varies, right? They haven't been as good, but they still have been moving quickly. But the key note is also this: even though that this is the median prices, the ones at a higher price point, like a Burlingame or a Hillsborough or a Atherton or a Los Altos, those have been still very, very competitive. Actually, I would argue probably some of the most competitive that it has been. Let me show you some of the stats of those specific cities that you can see it momentarily. Like, let's pull an example like Los Altos. But for now, you can see like the medium has still done pretty good, right? You can see unless you bought like in April of 2022, they either have hit that number or it's actually doing pretty well, especially if you bought even at any of these low times, or never mind if you bought like back in, let's say, the same time period we looked at, like anywhere like a 2020 or something like that, right? So you can look at 2020, you can see like it's significantly higher than these numbers. So you can see the single family has been more resilient. Doesn't mean it's like invincible, by the way, but it has done a lot better than a condo or a townhome, especially a condo. But I do want you to see this, right? Let's talk about like some of the more luxury ones. So some of the more expensive ones. So let's just look at like a place like Los Altos Hills. And I want you to kind of see some of these numbers so you can see kind of the result of that. So if you look at this, right? Let's compare it back to like 2022 because that was, as you saw, that was generally the peak of things. So when you go for more premium properties, you look at this, right? Look at the previous highs of 2022, probably May, June, 4.7, 4.7. But look at what it is now, 5 million. So that's a good amount more, right, than what you have seen even from the previous highs. And this is also a lower time, by the way. If as we compare to next spring, as you can see from this spring, look at some of the numbers that they hit this spring or like kind of early spring. You can see some pretty stellar results, right? So the luxury market is the thing that has been just the clearly the benefactors. And why? You just saw the reasons. It's not because of the interest rates. I mean, that's has nothing to do with it, quite frankly. It has everything to do with the stocks and the valuations of these companies so that they are divesting from it though. So be mindful of it, right? Not everyone keeps thinking that the stocks will keep going up forever. Some want to divest because they think it's too hot. Others have made so much money, it just makes financial sense to have a couple million bucks, as you can clearly see, to divest into it. So just be mindful as you allocate resources like, hey, look, if things have gone well for a long time, it doesn't hurt to pull some back. Even if you just kind of bring up the example, you go back all the way to the dot-com boom, and we don't know if that's the case, and we have no idea how long this may go. Some of those companies went straight up, like completely, the valuation went down like a lot, if not went to zero. But it's not like people didn't sell and move around to different companies. And so some people may have had an incredible forward-looking number. They sold a lot of that, and then they put it into house. And while the house price did drop, it didn't drop the extreme that some of those companies dropped, which some of them went to straight up zero, never could get liquidated, right? All of those things may potentially be the case. So I wanted to share that with you so that you can see. Now, how is like the general Bay Area doing? Let's kind of pull it up together, and I'll make some comments about seasonalities and also just kind of some other further trends that are continuing to happen. So let's pull up all of the counties. So Marin, Santa Clara, San Mateo, Alameda, Contra Costa. And we'll take a look at we're doing this in real time, right? This is all from the actual database of where all homes sit. And by the way, if you didn't know, Zillow and Redfin pull from these databases, but they don't have the access that you guys are seeing here. But if you look at the general market, right, this is kind of follows a normal trend. So if you look at all of these, just look at for the year. So you can see like August was kind of the lowest of this year, or of the dip from spring. If you look at 2024, same. If you look at 2023, same. Even if actually look even at 2022 when rates were continuing to rise like crazy, kind of the same-ish. But then you can normally see there is a rebound, right? So it does pick, home prices do pick up again with September and October. So this is kind of the same. Or these are actually higher than August. These are higher than August. And October has finished is actually higher a little bit than last year. Nothing unusual. People are back from vacations. People are back from the summer holidays. People want to kind of move on with their goals. But you can see November numbers are still pretty strong, at least historically. So you can look at last year, right? 1495. Now keep in mind, November results are some of the things that have transacted in October. So as we enter in December, right, a lot of these numbers are significantly lower. So November timeframe tends to be November activity tends to be less and tends to be frankly some of the best deals that you're going to get. So do not miss out on the opportunity if you're looking to make a move because otherwise you may completely miss the boat. Now, there is a thing to be mindful of, which is the number of new listings that occur every kind of month. So if you take a look at this, number of new listings. So let's kind of compare so you can see for yourself. This is all new listings. And we'll put all the different asset classes here, single family condos and townhomes. They will flow together, you'll see. But you take a look at this. October, by the way, of this year had a lot of new listings. So for those that have been struggling, it's completely on you, and you may just want to adjust your search and your expectations if you haven't seen anything. Because you look at September, right? This was also even higher than last year, which was much higher than the previous years, right? These months have been frankly, very, very busy in terms of options for people. Now, whether they are a fair price or not, that's a completely different matter. But look at the numbers of November. They will shrink by half, right? Look at December relative to October. That's that's shrink by like 60%. And it's not until January you can almost add these numbers up. Then you have the numbers from January, and look how crazy and busy this January was, and even this February, right? Like it was very very busy. The whole year was actually much busier than others. So just be mindful of that, right? If you're actively looking, which I have a lot of people actively kind of game planning, the thing about selling, the thing about buying, it's not a bad time to get in because you'll see, as you can see, some of the lowest prices of the year. But just be mindful that you're going to see a whole lot less. So everything that you saw, however many transacted that could have worked in the last 2 months, that's what, 11,000 homes. Upcoming at 4,000. You better temper expectations by 60% less, right? So don't be too stressed about it, but be ready to go. You might catch a great deal, but that's something to be mindful of. And this is primarily for single family. Now, I also want to show you this. How many of these actually new listings sold? So what was the actually sales activity? So you saw those numbers, very good amount of new listings. You can still see there's quite a bit of transactions that still ultimately sell, right? So you look at October, this was the highest that has been in the last several years. You look at 2025, September, that was also quite a bit more. So you can see October was actually quite a bit good rebound versus some of the previous months before. And you can see in November, you're still probably gonna get a good amount because those are from those October listings that we just saw, right? A good amount of October listings, many of them will transact. And then you'll see that these numbers will be much less and less because they are a laggard, usually a 21 to 30 day laggard as to those options, as to those homes that actually come up. So just be very mindful. So I wanna also then share like what you should do if you are a buyer or a seller. And obviously, I would love to set up a game plan with you. My contact details are below. Phone number is 408-547-4590. Feel free to call me or text. We can go over a game plan. But let's kind of go over all these scenarios. If you're a buyer, and you're looking at a single family home, and you're looking at options. I would say, as you can see, most people are figuring out ways to divest from stocks. Maybe they sell some stocks. Maybe they borrow against stocks. There's a lot of these different options that are available. I'm happy to give you those options and you can figure that out. But those are all solutions that people are doing because, as you can see, they're still wanting to move on. Right? Most people are trying to get a bigger house, move to better schools. Maybe their kids are a certain age, right? All of these are factors for people to move on. That market is still competitive. Be ready to go. Um, don't expect like crazy discounts or anything like that. As you can see, you're probably not going to get that, especially the higher price point ones. The stuff that may be like under 1.5, those kind of starter places, it's a little bit easier, right? But when it comes to the more expensive ones, it's actually harder and harder. It's just what it is. I mean, a lot of people still have a lot of money, and those areas are really small, and they never build anything anyways. Now, if you're a buyer, probably a first-time buyer, maybe you're trying to buy a condo or a townhome. I mean, I don't know how much more of a decline they may have. I can't really expect it to go up in the near time, but the benefit is that it's going to be some of the easiest that you will find. Now, will it still match the price point that you're at? We will see, right? You want to still have that coronation, but I find a lot now, a lot of non-tech people able to take this opportunity and make a move. Like I know people in government. I know people that are working in the hospitals. I know people that are working at like maybe they're not even in tech. They're just working at companies doing maybe accounting work or sales work, these kind of things. This is like a huge percentage are the ones actually buying because their jobs are not as impacted of AI versus like a entry level engineer, right? Entry level engineer is very difficult, right? And so those are not the buyers anymore. So the good news is that those people are the ones that are able to get in. So if you're like, look, you look at your rent and you're like, yeah, this is like pretty bad, and you want to kind of get out of it, this is a good time. You may not be able to get a single family. Maybe you could, depends on your circumstance. But the condo and townhome market may be a good avenue for you to get going and live in it for 5 years and then figure it out later on. Now, if you're selling is a different question, right? Selling, you should think about this. If you were to buy that same home today, would you buy that? And the answer is no. You might really want to think about selling it, even if it's maybe a loss. So you have to decide that yourself. But as a seller, you have a few options. One, do you straight up do nothing and just basically rent it out? Or, I mean, you live in it or whatever it may be. Two, do you just do nothing and you rent it out and then you kind of kick the can down the road? Number three, do you bite the bullet, take a loss? That's your choice. Or four, do you test it now and then we can test it again? And then if we get a good number, we sell, which you never know. Like you could still hit a good number right now. Or do you just prep it and get it ready for springtime? Springtime is only 3, 4 months away, right? So I have a lot of sellers say, look, really up to them. I say, look, this is a situation. Usually spring is the best, but if you got things going on, or maybe you want to buy a home in winter time, it's not a bad idea to because you need to sell. It's not a bad idea to sell first and then buy a cheaper home in winter, especially if you're more open or maybe you're buying at a lower price point, you're downsizing. There's all these different scenarios, right? So depending on your scenario, you got to figure that out and then see what makes the most sense, and ultimately make that decision. So hopefully this was helpful. It's not an easy market. It's a very confusing market, and this is why people trust our analytical approach because every home has to be considered separately, and it's just kind of moving on its own depending on the area. So there's all these little intricacies with it, right? So our goal is to help people filter the noise, understand the best options, and then make a empowered game plan, which fortunately in this tighter market, people are valuing more than ever. So if you found it valuable, be sure to like and subscribe. Share it with your friends. Have them reach out to me. Have you reach out to me. Let's have a conversation, whether it's now or in spring. I'd love to be your partner, get you going, and get you underway. See you next time. Bye now.